I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. It's really been a fascinating 2 weeks, to say the least. Perhaps some of the most interesting 2 weeks between our discussions I may have ever seen in the markets in some ways.
Was there relief that the U.S. did not go ahead with tariffs against Mexico?
Well, that was the news item last week, and it was a strange one because it started with Trump saying he would put upwards to 25% tariffs on Mexico if they don't do more to control the border situation, and that caused the stock market to drop, although it was already pulling back because, as we discussed before then, the S&P 500 was so overbought at the end of April that some sort of pullback or consolidation at the least was likely to take place in May, and it did. So the fact that that news happened and the market fell a little more, I always think of the overall market situation more important. In the news, I don't even know if it was real, because my first reaction was, well, can they really put 25% tariffs on Mexico? I mean, a lot of our car manufacturers, such as General Motors, they are building components in Mexico and bringing them back up to the United States to complete the assembly. And this goes on in many industries, so it would completely screw up the supply chains. It just didn't seem like reality. But regardless, it was treated as such. And then in the media, and then Sunday, Trump said that they'd come to a deal, and then the market gapped up a little bit on Monday and sold that news. But I just think of that whole thing as a storyline that everyone's going to forget about going forward. And now we're on to the new storyline, which is real, and that is that the Federal Reserve is now poised to lower interest rates at some point before this year is over. The Fed Fund futures are now projecting that. Now next week they have 82% chance of no rate cut, but in July it's 77% chance, and by September 91%. And when we last spoke, the odds of September were 50 and December was 90. So we're getting closer one way or the other to the coming interest rate cut, closer than we were when we last spoke by a matter of months instead of weeks, or I should say matter of weeks instead of months. Whether that happens in July or September, it's going to come, and that's helped put a bid on the price of gold, rallied back up to $1,350, and I believe gold is going to be the simplest way to benefit from lower rate cuts, or the lowering of interest rates by the Federal Reserve. Gold tends to go up because that increases the risk of inflation or even more dramatic monetary policies that could hurt the value of the dollar. And last week, when Federal Reserve Chairman Powell gave a speech, he said that in the next cycle of the Fed lowering interest rates, you could even see the Federal Reserve go back down to zero, as they did before, and begin a new quantitative easing program. In fact, he said we should now consider quantitative easing as a, quote, normal instrument of Federal Reserve policy during an easy money time period. So that's what we got to look forward to. And in my view, the thing to do is buy gold, buy mining stocks, and silver has not followed up with gold yet, but silver has long-term resistance at 15, support at 14, so I think it's a great time to accumulate silver. All this stuff said, though, it isn't till gold breaks through 1350, and that might not happen till the next Fed meeting or maybe in August or September, that the masses are going to really get interested in it and jump on board. So I think that's good for us. We're early in the game, but bad in some sense because it means fewer people are willing to, take action, buy mining stocks, even listen to our interviews. But that'll change. The audience will grow, and we're early in on the game.
Well, Mike, as you know, to make money, you got to be early in the game, not one of the latecomers.
Yeah, exactly. In my view, silver and gold are kind of like, don't want to go to maybe this extreme, but they're sort of like where Bitcoin was at the end of 2016, meaning that Bitcoin had a base of around $1,000 a coin, and then it broke out of that and went to 20,000. I'm not saying gold and silver are going to go up like that quickly, but they do have that long-term base of 1350 resistance on gold, about $15 or so on silver as resistance. That has been resistance for years. For gold going all the way back to 2014 just about. So it's 5 years. So this is a long-term resistance point. The longer the base, the bigger and longer the next move comes. So to me, these next 2 months or so are going to be fascinating moments for the gold market, for people who want to invest, who want to get into the right mining stocks and look for great opportunities. I know most people in the United States, they're interested in the stock market, the Teslas, the Nvidias, and we've gotten a bounce on the S&P 500 now off of the 200-day moving average. So that's getting people excited there this week.
We'll have more with Mike Swanson right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome back. We're speaking with Mike Swanson. Mike, just a short while ago, a firm was running ads saying, get rid of your old dinosaur gold and get into bright, shiny, portable Bitcoin. Is that good advice? Drop your gold and stay in Bitcoin.
No, I think that's pretty crazy, honestly. First of all, I don't believe Bitcoin is money or cryptocurrency is money. Because I don't think it functions as money. In order for something to function as money, it has to operate as a stable store of value, and Bitcoin goes up and down so much that doesn't happen. There also are huge transaction fees when you use a cryptocurrency. You have to transfer it in and out of wallets, in and out of brokerages and so forth that makes it prohibited. You know, you can't just use it like you can a credit card or a dollar bill, so to speak. So the promise of Bitcoin replacing the dollar, it's not going to happen, and it's not going to replace gold or silver because it's not a stable store of value either. The whole thing that makes silver and gold attractive is that it is a stable store of value because you can't just create unlimited gold and silver. Now the Bitcoin person will say, well, look, you can't create unlimited Bitcoin because the more that's created, the more the computer algorithm slows down on the production of future Bitcoins. Well, that's not true of the whole cryptocurrency market because, anyone can make a cryptocurrency. So the whole crypto market is the problem. It's not just Bitcoin. You have to look at the whole market in itself. and it can't replace money. It can't replace the dollar. That doesn't mean it's useless. What it's useful for is an instrument of speculation. So yeah, if you buy Bitcoin right now, as you're speaking, below 8,000, and it were to go to 16,000, then yeah, that's good. But if it goes down to 2,000, that speculation turns into a disaster. My problem is, I have no way to know whether it's going to go up or down except by looking at the chart, because there's no fundamental value to it and no way to tell what a Bitcoin should really be worth. That's not the case with gold or silver because they cost something to take out of the ground. It costs around $1,250 an ounce globally to get gold out of the ground. So there's kind of a base value to how far gold would drop, and you can evaluate mining companies based on what it costs them to take gold out of the ground. Now, you combine that with the interaction of gold with the U.S. dollar and other currencies, which is a relationship that goes back basically forever. Gold tends to go up when currencies go down in value. Then you can try to figure out, is gold going to go up or down? Well, when it comes to the U.S. dollar, it's likely to go up against the U.S. dollar because of what we're heading towards, which is an easy money policy regime, and that tends to weaken a currency of any country when their central bank lowers interest rates and so forth. With Bitcoin, there is no reliable correlation between the value of Bitcoin and the U.S. dollar at all. So, and you can measure that. You can go to a website such as stockcharts.com and figure out the valuation metric using their indicators at the bottom. And we've talked about it in the past with gold. The correlation is about negative 0.9, meaning when the dollar goes up, gold tends to reliably go down. With Bitcoin, it's about even, meaning there's no real correlation. In fact, Bitcoin tends to be more correlated with the action of the NASDAQ than anything else. So, in that sense, it's more of an extreme bubble sector that people are speculating with, like they would with internet stocks back in 1999, than it is an alternative asset.
Is this a case of millennials understand computers better than something that comes out of the ground, so they've just been looking at Bitcoin because they understand it?
Yeah, I think that's a good argument, and that's also what is unique about Bitcoin, which I've never seen before in trading the markets. So I started out in the 1990s, and the internet stocks were the big thing back then. And I was trading internet stocks, and it was kind of the same thing. I was using the internet was new, and here's stocks about the internet, so let's trade them. And that bubble went bust. But that bubble was really unique to the Western world. The United States in particular had, the biggest bubble in internet stocks. With Bitcoin though, it's unique because the bubble in cryptocurrency is a global bubble, a global trading bubble. So I was one of those day traders in the U.S., and it was a big fad for a couple of years, people trading and opening up brokerage accounts and doing this and that with stocks. Now, 2 years ago, it was people opening up apps to trade cryptocurrencies. But what was unique is that whereas in the 90s it was mostly people in North America doing this, because you had to open up a brokerage account. You had to have a couple $1,000s just to do that too. With cryptocurrency though, you could have, all you needed was a cell phone, and there were global crypto exchanges all over the world. So people were trading this everywhere, and you didn't even have to have a check, a deposit. You could just have a credit card and put in $20 using your credit card and start trading. So this was a global trading mania in 2017, and that's something I think maybe unique in financial market history. It could be an explanation of how it went up to 20,000, Bitcoin did, and how it also crashed so quickly, and why it didn't really need to be based on anything but pure speculation. So, yeah, but the good news, I think, is that some brokerage companies saw that, hey, this telephone trading and app trading, this is the future, and these guys are on doing this Bitcoin crypto stuff. Let's get them into stocks. So we've seen the rise of companies such as Robinhood in the United States, which enables people to open up an account with just a couple $100, even use a credit card, and get free trades. You don't pay any commissions, and you can basically buy $10 worth of stock on there. So they've seen that market, and are starting to fill it, that niche of people that, can't afford trading commissions, can't really buy $1,000 worth of stock. And hopefully they're starting to peel some of those people away from crypto trading and at least get them into stocks and something real. Because when you buy a stock, you are buying a share of a company and not just some virtual currency that's based on pure price. With a stock in a company, there's earnings, there's dividends, there's a way to value it. You can buy exchange traded funds. And if gold goes through 1350, as I think it will, we'll start to see individual mining stocks appear as some of the popular stocks to buy on places like Robinhood, Ameritrade, and so forth. Right now, in Robinhood, you can look at the top 100 most widely owned stocks by the most number of people. Number one is Aurora Cannabis. Tesla's on the list, and I think number 7. Canopy Growth is on the list. Apple's on the list. Nvidia, and so forth. But there's only one mining stock on the list. That's Yamana Gold. There's not even a gold stock ETF like GDX. JNUG's not on the list. Only one, AUI. That's it. Once we see gold go through 1350, we'll start to see people get interested in chasing these stocks, chasing the action, and that's how gold can, and the mining stocks can continue higher once that 1350 level is breached. And I view 1350 similar to the $300 price level that I saw as long-term resistance when I first bought a mining stock 17 years ago in 2002. $300 an ounce was resistance for about 3 years, and it seemed like it couldn't break it. But when it did, gold went to $700 an ounce. Then that became resistance for a couple years, I think about a year and a half. And then when that was broke in 2007, in August 2007, gold went to $1,400. And I view this moment not so much for the stock market or the banks or real estate, but as being very similar to that August 2007 moment for gold and treasury bonds, because in August 2007, treasury bonds just shot up in price, and gold broke through $700 an ounce, as there was clear signs that the economy was starting to get impacted by the drop in real estate prices, and the beginning of signs of problems in the mortgage market and with banks. That's when Jim Cramer got on CNBC and started screaming that the banks need help and the Fed needs to lower interest rates. Well, soon after, within hours or days of Cramer doing that, gold broke through $700 an ounce. And right now, we've seen a dramatic rally in treasury bonds, the U.S. dollar weaken, as there's been more and more worry about a coming recession or negative impact of tariffs, and a jump in the odds of the Fed lowering interest rates. So that's why I think this period of 2 weeks when we last spoke has been so significant, because of the changing shift of people's expectations of how quickly the Fed's going to be lowering interest rates, and that's going to, I believe, lead to gold breaking through 1350 probably before the summer is over.
We'll have more with Mike Swanson right after the break.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, I've heard that shale oil producers in the U.S. are running into financial problems because their wells are running dry a lot faster than they thought they would, and they still owe a lot of money. Is that happening?
Yeah, they're under pressure. There's no doubt about it. They've been under pressure for years, though, because of what happened in 2016 when the price of oil went into that big decline, went below $30 a barrel, and that put a lot of these companies, made a lot of them go bankrupt, and then the ones that didn't go bankrupt, they run into trouble. They have to cut expenses in order to stay in business, and that can lead them to not investing in improving their own operations or not maintaining them well, and then you have some problem like flooding and water, and there's nothing they can do about it. So I do think that's definitely something that's happening. Now, another thing, though, that's happening is that some of the larger oil companies, Halliburton, Exxon, you just go down the list, are buying these guys out and taking advantage of their kind of desperate situation to do that and consolidate the industry. So that's sort of a boom-bust cycle of capitalism that's playing out again. But the oil market's interesting right now because it fell in the last quarter from $77 a barrel down to $42 when the S&P 500 fell 20%, and then it bounced back up with the stock market. And we also had those growing tensions of Iran, more statements by the Trump administration that they basically want to strangle Iran to prevent other companies from buying its oil, which helped create a short-term pop in the price. It's helping also benefit Saudi Arabia and Russia and other oil-producing countries who are poised to steal the market share. But despite the tensions, oil has dipped back down and is hovering right above $52 a barrel. So oil seems to me like something that's not really in a big bull market, and it's probably going to continue to go sideways in some range, let's say around $57 for the rest of the year.
Mike, anything else outstanding, marijuana stocks and so on?
Yeah, the marijuana stocks are interesting. Some of them did pull back in May. For example, that Aurora Cannabis actually, it was basing between about 8.5 and 9.5, and then it broke down. In trading a little weaker than the stock market. But some of the others, such as Canopy Growth, they're trading better than Aurora. So if the stock market continues to do okay, and I think it can, then we should see some money at some point rotate into the stocks ahead of their earnings going into July. I'm kind of agnostic, though, on what the stock market will do after that. I'm not really sure. That's why I'm personally more focused on the gold stocks. But one asset class that I think is also worth keeping an eye on is the agriculture sector, because I think we may have seen a final bear market bottom take place in agriculture, soft commodities. They have been in a bear market since 2011. That's like 8 years. And in May, when the news of the Trump and China tariff situation hit, negotiations broke down, and it looks like a trade war began, there's a final drop in these soft commodities, a final about a 10% dump, and then a strong rebound back up to the 200-day moving average for the agriculture index, or the ETFs, our DBA and RGA, which reflect index, took place. So I think this is a potential bottom, and if we can consolidate there and then break out, then we should see these things, the agriculture commodities, rally strongly into the end of the year, probably begin a whole brand new bull market. And I kind of expect that to naturally happen. First of all, we've got the bad news of the agriculture farming situation in the United States with the mass flooding everywhere, and the corn crop is only 20% planted. It's a really terrible situation. But historically, when you have gold and silver go up, and I think they're poised to break out and take off, these soft commodities and agriculture commodities follow. And then oil ends up going up a year or two later. So it appears to me that this cycle is poised to repeat. And I think there's an opportunity. I've got some of my portfolio invested in the DBA ETF, but people who are real gunslingers, there's going to be people, if this goes up, they'll make fortunes trading this stuff in the futures market, but I'm happy just to play with the ETF.
Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.